Happy Thursday. Welcome back. I believe this is the fourth discussion of the TokenizeThis 2024 event. Thanks everyone for being here. I am Peter Gaffney, Head of Research at Security Token Advisors, which is actually our firm's own consulting and advisory practice. We'll work with issuers, platforms, infrastructure players, everything fintech to legacy finance, bring them our way. And here, I'm about to be joined by one of our peers, Anthony Bassili, Head of Tokenization and Asset Allocators at Coinbase. Anthony, if you want to come out. Beautiful, let's hear it, let's hear it. All right. Well, we have some great panels right now, some great firesides and keynotes, and I hope this follows up super well. Anthony, why don't you, everyone's thinking about Coinbase these days, have been for a while. Would love to hear a bit about you specifically. Let the audience know who Anthony Bassili is.
Awesome. Hi, everybody. Thanks for having us, Peter and team. This is really phenomenal to be here. As you mentioned, I'm Anthony Bassili. I run two businesses at Coinbase, institutional. One of them is the asset allocators business. So we help large institutional allocators with their digital asset needs. So think about an endowment that is holding crypto, and they need custody, wallet, trading, infrastructure, and support. So we have a whole business with a number of folks across my team that help support those clients for the digital asset needs. The other part of the business is around tokenization. And so what we're doing is building really a roadmap for the tokenization industry to utilize Coinbase as an infrastructure player so that they can continue to activate on different products that they're building. Happy to go into a little background of how I got here if you'd like to as well.
Yeah, I would love to hear all that. Let's give the audience a good perspective to kind of see it from your eyes.
Yeah, sure. So I'm at Coinbase now for 2 years. I joined in 2022, really right before the last bear market started. I was at BlackRock for a decade before that, and I did private equity before going to BlackRock. I would say a lot of the reason I came here was really from my career journey at BlackRock, where I was in a number of different businesses. Early on, I was part of the multi-asset restructuring team where we did trading across asset classes for institutional clients, pensions and sovereigns, and others around the world. I spent a number of years restructuring large multi-billion-dollar portfolios across all asset classes. And in that role, we had to use every product at our disposal, and you get a really keen insight into just how challenging it is, even at the most sophisticated financial institutions in the world, to manage risk and utilize different investment products that are truly global, right? And so if I have a 5 to 20 day trade strategy across asset classes, the products don't speak to each other, and everything's in a silo. So there's a lot of risk still inherent in the structure of today's market that was challenging to deal with. So early on for me, when Ethereum came out, I was always asking this question, like, is a globally scaled blockchain that allows us to bring products onto the same network going to be a good solution for us to build products? It was natural in my mind. Also, the ability to automate instructions via smart contracts eventually would be something that would turn into where we are today. Fast forward, I was towards the end of my career there, I was head of pensions for iShares. I was early in utilizing ETFs for portfolio construction. I think they're still today one of the most novel financial products in the industry and still highly misunderstood in terms of the effectiveness of those products. It's not unique today that we are now looking at Web 2 products wrapping Web 3. That's how flexible ETFs are and powerful they are. They're really awesome. When I was there, I was helping institutions embed ETFs into their investment process, again, across asset classes. So alternatives, private markets, real estate, et cetera, can utilize those wrappers. And for me, it was this conversation with institutional allocators that I spent a lot of time educating them on the market structure of this financial technology, the flexibility of it, and why it's useful, right? Eventually, I was able to convert a few pensions to fire all their active managers and just use ETFs, right, across multiple asset classes. While I was doing that, though, I was going really deep into crypto, again, trying to scratch that itch of, can it be better, right? Can we have better products that actually are composable, that actually are smart financial instruments where they can operate on the same rail? And so 2019, personally, like most people here, went deep into DeFi and started to see the unlock, right? So early on, I was building my own smart contracts on chain, which would allow me to have an automated rebalancing product that had Bitcoin, ETH, Solana, and something else. And I can hold that in one single wrapper. And for me at that time, in 2019, 2020, it became clear that this technology is maybe not fully ready for institutional adoption, but we're ready to start creating the products and starting to have the conversations with the market that this is where financial technology is going. So long journey, but I joined Coinbase in 2022 to really kick that off. And so I joined them to first help allocators with their crypto needs, help them get the infrastructure they need to manage digital assets. And then that conversation evolves over time into what else can you do with this infrastructure? How is it going to change the way that you invest? And here we are today, starting to, again, like push the thread even further on tokenized financial products.
Beautiful. Yeah, I remember I think we met a couple of years back, and you were telling me the story. You were making structured products personally, diving into it, like you just said. And I think we see, we as a whole in the industry see a lot of that through Coinbase now, through other providers on the service side. We see private credit platforms, protocols. We see equity offerings, real estate, like we were talking about earlier. Would love to kind of dive into the infrastructure stack a bit. Even on our consulting side, we get clients asking all the time, how do we work with Coinbase? Can we list a token? It'll be on Coinbase, and baby steps. So I really want to dive in and see. Coinbase has the Prime Web3 wallet. You have verifications on the Base blockchain, which is taken off in 2024 tremendously. You got the custody side. You got USDC on the stablecoin side. Why don't you take it, Anthony, and kind of lay out the stack in a way that pertains to tokenization for us, if you can?
Sure. I think the first thing that everyone should know is the same exact infrastructure that's utilized for crypto is going to be the same infrastructure utilized for tokenized products. The only difference is who in that process has certain licenses to handle registered assets. Outside of that, it's the same infrastructure. So what crypto has done and continues to do is it's laying the foundation for the market structure. And if you look at the entire crypto economy today, and last year, over $14 trillion was traded and settled via stable coins and different trading pairs, right? So this is on a global connected infrastructure across multiple chains using USDC, using Tether, using other products, where you have the dollar amounts that rival MasterCard and Visa and others, right? So $14 trillion of trading pairs have settled. That's significant, right? The market structure has also gone through multiple terrible bear markets, right, with volatility that makes TradFi investors cringe at night. And so when you think about the resilience of decentralized networks, Ethereum and other L2s, right, it's really gone through battle testing for many, many cycles now, which is significant. And we have a composable layer of technology that allows you to be really innovative and design integrations across different applications and build a lot of new features, right? So that infrastructure layer is where we want to bring traditional assets. How do you get there, right? And so Coinbase, what you'll see a lot from us is that we talk about being a bridge to Web3. So when you start out, institutions especially, they need certain things, really basic stuff like a qualified custodian, right? They need to be able to know that as a fiduciary institution that they're going to put their assets into a place that is a qualified custodian. We are regulated by the New York Department of Financial Services as a state-chartered bank in the United States. We've got our SOC 1, SOC 2 reports, right? The platform is robust enough for us to have integrations with Aladdin at BlackRock, robust enough for us to now have 8 of the 11 Bitcoin ETF filings that are out there, and pretty soon the Ethereum ones as well. So Coinbase continues to solidify itself globally. We're in 100 countries as that premier infrastructure layer upon which institutions are building for crypto needs. Now, the question for us is you have the exchange, which is our retail exchange platform where retail investors and market makers all trade, and they're just trading crypto. And then you have the custodian business, which is our institutional platform. People want other products within that platform so they can then go on to Web3 and build. So we have our custody platform where we hold digital assets. We have wallet features in there. So every institutional Prime client today has a Web3 wallet that they now can go on chain and engage in decentralized applications across multiple networks. So they have their core place to keep their assets safe, and they have a wallet that can go on chain and they can sign transactions and hold just about anything they want in that wallet. You talked about other tools and features. For tokenization to work on these rails, you're going to need custody, you're going to need wallet. We are a part owner of Circle, So Coinbase made a big investment in Circle last year, and we have the only other ability to mint Circle, mint USDC, which is US dollar coin. So right now we're somewhere in the above $28 billion of total assets that are held inside of the Circle product, and that is a digital dollar. So it's a one-to-one backed digital dollar that you have to convert into to move fiat on these rails. So we wallet, custody, Circle. The other thing, you talk about identity. A big challenge for tokenized products today is being able to satisfy your obligations with AML and KYC. And so today, there's a lot of friction in the system. So a user who's trying to operate in a decentralized way, go into different applications and participate in their products, using their self-hosted wallet, for example, they have to go through a KYC process with every single one, right? And that's just not a good user experience. So how do we solve that? There are different tools in the space. So one of them is Ethereum attestation service. What we want to do with identification on chain, because we have now we have 100+ million retail users. We've got tens of thousands of institutional users on our platform. We've KYC'd all of them. We're now giving them wallet technology so they can kind of go on-chain, and in particular go onto Base and other networks and engage in decentralized applications. We also want to give them the tools that includes identification. So we've launched a thing called Coinbase verifications. And what that does is it takes our KYC that we've done on those users, and it gives them effectively a tag in their self-hosted wallet. So we hope, and I think we're over 300,000 wallets that have attested to this KYC now. What we hope to see is that continues to evolve, and more users of Coinbase continue to bring in that attestation into their wallet. And then what you all who are building across this ecosystem can do is start to think about shifting your KYC process so that it works with the Ethereum attestation standard. And again, this isn't a Coinbase standard. This is an open, decentralized, Ethereum Foundation approved standard for identity proxies, right? And so there's like 17+ different schemas that allow for self-attestation today. We expect that eventually to evolve into something like a KYC reliance model.
And what would that be, Anthony? Like accreditation status, jurisdiction, wealth, like a number of assets? What kind of attestations are you looking at?
Yeah, all those. Your citizenship, right? So today it's Coinbase has verified this user, and this is a self-attestation. So a user has to go do it, and they can only do it if Coinbase has them as a KYC user. So they self-attest, and then they can say, I'm a citizen of this particular jurisdiction. That's where it is today. It's going to start to evolve into accreditation and other things. And so I think for the builders out there, we want them to understand, this is available to you on Base today, which is our layer 2 blockchain, which I haven't talked about yet. We'll get to it. But it's a really critical part of the market structure that's coming together in terms of how are you going to connect with users? How are you going to make the experience for them to participate in your products easier? And that's, there's a lot of work that has to come together for that.
Understood. Great explanation. So just so we know, if let's say a user is verifying their citizenship and the accreditation status through Coinbase, that gets stamped, or let's say they have the ability to stamp that on Base itself, a layer 2 blockchain. And if, let's say, a platform provider in the industry integrates Base, now they have access to that attestation on behalf of their user? Is that the way to kind of streamline that? So if I'm onboarding as a user, I'm already working on Base, my info is there, and they're integrated with Base, I'm good to go through their platform?
Not necessarily. If you're dealing in like a registered product, you still have a requirement to be compliant and follow your own KYC rules. So you're still going to be required to do your own KYC. Especially if you're like operating as a broker-dealer or something. So you can't rely on this attestation today to solve for that. What it does is it reduces significantly wasted time, right? So you can start to think about permissioned applications that only allow for a user who has gone through this attestation process to significantly reduce the amount of wallets who come in, right? And you would think that's not a good thing because you're concentrating the flow, but it's actually great because then when you do go through a KYC process, you're going to know that they're a US citizen and they have been KYC'd by a large institution. What we want to see too is other institutions also integrating their EAS attestation standards. So it's not, you can go on chain today and look at the Coinbase ones, but there's other institutions who are already doing this. So we have 300,000 wallets that have gone through that verification process. There's over 850,000 total from other institutions who are participating in the same thing. So we don't think this is just a Coinbase thing. This is an open source, decentralized protocol, right, that we think everyone should utilize, right, and it will start to form the market structure that makes it a lot easier for, well, as I mentioned, a simpler KYC process.
Beautiful. And this is all on Base. So you want to tell us a little bit about Base itself, kind of where it's at in the market, traction. I know we had the blockchain panel earlier, but would love to hear a bit about that.
Yeah, sure. So going back to the tech stack, what we're trying to do here at Coinbase is to bring all of the tools that you need to bridge into Web3. And we talked about custody, we talked about wallet technology, we talked about the exchange for liquidity and trading, we talked about identity. There's other tools that are part of that stack that I won't talk about right now, but they make payments a lot easier. We just launched a thing called Smart Wallet that I'll come back to. But the big critical missing piece of that vertical tech stack was a blockchain. In Coinbase, we have a lot of partners in the room, from Solana to Polygon to Avalanche and others that we work with in a lot of ways because our clients want to be able to access different blockchains. What becomes challenging is there's hundreds of blockchains, right? And we expect there to be millions and millions of blockchains. It's impossible for us to continue to do integrations with new blockchains. So Brian and team got together and said, how are we going to scale our business to get to 1 billion users, right? How are we going to do that and support those users to go on chain and engage in Web3 safely and securely? So the way to do that is not to continue to try to integrate with all these new chains that come out. The way to do that was to actually build our own blockchain, right, that is interoperable with the Ethereum EVM, right, so that other networks can come and engage on that ecosystem. So our first step is to bring our users today onto Base so that they can engage in different decentralized applications. From there, they're going to be given all of the tools they need to do this safely, securely, such as identity and wallets and other things. And from there, they can go wherever they want, right? It's connected to the EVM networks, and they can bridge into multiple other networks as well that maybe aren't EVM. So what is Base? Base is an EVM layer L2. It is built using the optimistic stack. So we follow the law of chains, right, which basically puts Base as part of the optimistic stack, and you've seen optimism really fly lately too, on that allows for multiple chains to be part of a federated model. We think it's increasing the security of our blockchain and the optimistic connected blockchains, because we're part of the foundation of optimism. And so like if there's a security flaw or something in one of the networks, right, you have fail-safes across that ecosystem. So we think it's critical that we're part of the optimistic stack. It's a L2, it's EVM compatible, as I mentioned. So what does that mean? That means it's fast, it's cheap, and it's efficient. And so we just upgraded our block space with EIP 4844, which is a really nerdy way to say we've reduced the cost and we've increased throughput of Base. And so we're doing close to 30 transactions per second. TVL on the blockchain is now over $5 billion, and that's really ramped up in just the last few months. And what we've seen is a number of the market participants have come in a big way wanting to build on Base. Part of that is because Coinbase has just a wonderful marketing brand. Our customers really like building on a tech stack that allows them to integrate with the Coinbase ecosystem in a really coherent way. But there's been different applications that have unlocked on the consumer side. So early on it was Friend Tech, which was a social application. Then it was Farcaster, which was another big unlock that drove a lot of activity, which was another social application for builders. And more recently we've seen a lot of the meme coin craze has kind of gone crazy, which is DeFi. Right? So we're seeing DeFi take off in a big way on Base, and it's really driving a lot of activity in this ecosystem. What everybody looks for in tokenization is like, how do I reach distribution ultimately? How do I reach customers? How do I get them to show up so that we have a chance to sell them something? And so the challenge for folks today is, it's a really big challenge, because if you're in the business of building a tokenized product, which most of us are today, you're like, I got to build the tech, and then I have to go build a pipeline of high quality assets, right, to bring into this format, and then I have to go figure out distribution. And those take a long time to do, right? So what we're trying to do is build technology to make that ecosystem connected so that people can be there, and you guys can build on top of Base to be connected to that ecosystem.
Beautiful. No, I love it. The activity's there for sure. The stats are backing that up. March, April were incredible months on the base side. I'm very curious about Coinbase Prime, the Prime Web3 wallet, let's say. I know you, Coinbase colleagues in the house, kind of calling it a grocery store model, right? Supermarket model in a way. I know you have integrations. So how does that work with me as an institutional client? If I want to work with Coinbase, am I onboarding with you to gain access to a securitized private credit fund, an obligate issuance, in Switzerland, a backed finance, treasury fund? Like, how does that work? How am I really interacting with them through you?
Yeah, so again, everybody, as I mentioned, all of the tokenization workflow is going to work on crypto rails, right? So that starts with your custody account and your wallet. First, so if you're an institutional investor and you're coming in, you're saying, I'm going to open a Coinbase Prime account, I'll be part of the qualified custodian, I'll get a wallet that's attached to that account. You can onboard US dollars into your Prime account and you can convert that to USDC. You can then move the USDC into your wallet, and then you can go onto Base or other blockchains, and you can then participate or sign transactions on other networks, right? So that wallet is your core piece of asset. That piece of infrastructure allows you to move around the crypto ecosystem. We think this is largely how the market structure is going to continue to form, where we're going to be an onboarding mechanism. A lot of institutional customers are going to have their core qualified custody account to keep the majority of their assets, and then they're going to be able to go into their self-hosted wallet, and they're going to be able to go onto the applications that you mentioned and engage in the products that they are offering, right? And again, those applications that are offering, if it's crypto, you don't need licenses. A lot of folks are getting their VASP license around the world, so we're seeing globally a mass rush of a lot of the applications to get the appropriate license in the appropriate jurisdiction. Our vision is to, again, be an infrastructure layer, but build an ecosystem that's multi-asset, multi-jurisdictional, and global, so that builders from any part of the world under their regulatory regime can use our technology. They can use the blockchain, they can use the wallet infrastructure to be a conduit for them to access customers, and then they can build their business offering products that they want. So Coinbase Prime is usually where it starts, which is an onboarding process there. You bring your assets in, then from there you can start to bridge out into the different parts of the ecosystem.
Understood. Now, USDC has tremendous room to run. I personally was underweight the significance of the stablecoin side until even recently. Clients of our own talking to Coinbase on so many payments involved, so much volume. It makes so much sense to do that all in the same rail. So if we're working with Base, working with USDC on Base, it all just makes more sense, right? Easier, kind of one point of contact, if you will. So that's all incredible. Is that kind of what you're seeing, Anthony, as a good onboard to some of your clients? Would you say the USDC side?
Yeah, USDC becomes your, you need a liquid digital asset that is flat one-to-one to a dollar to be able to move safely from asset to asset. So like most of the crypto traders that are out there today use it as risk off. So like they're risk on when they're holding some other token, when that has volatility, and then they're risk off when they go back to dollars in USDC. USDC is also like the natural pair trade for most of the products. When we get to a point where we have robust tokenized assets across different asset classes and they can be consumed by protocols efficiently, quickly, which I think we're a while away from, right? Because we need regulatory structures to show up. We need products themselves to be designed with identity checks instantly in those. So there's a lot of market structure that still has to come. When we get to that point, you can imagine a world where we go from everything having a dollar trading pair to where you could actually trade assets for assets, where it's not necessarily asset for dollars, it's one risk asset for a different risk asset. They can trade against each other. But USDC is the right beginning step of market structure forming, where you get those pairs trades, and there's tens of thousands of different DeFi liquidity pools. All of them use different kinds of pair trades in that mechanism in the same way that I'm describing. And so again, like crypto is the perfect embodiment of a liquid, free, and open market structure where you can design any amount of complexity into it and have assets trade with each other that don't have to be dollar pairs trade. But there's a network effect here, right? The network effect is like who holds the majority of, where are the majority of assets held in what products? What do people want to trade in, right? And USDC becomes that natural pairs trade in most of these liquidity pools that operate in crypto today. So we think a lot of that market structure is going to start to evolve for tokenized products. But again, we have a while to get there. Right now, we're focused on just getting products into a format that's digital and onto a blockchain so that some investors can hold them in their wallet. Most of those investors are crypto natives today. Those investors are not today large endowments. They're not coming in saying, give me tokenized products. They're interested, right? They love the idea of having a private credit fund tokenized, not just for the LP piece of it, but actually tokenized at this sub-asset level, right? So if you can take out ABS and you take out the CMOs and you can take out other components within that and tokenize those underlying pieces and then aggregate that fund up into a structure that allows them to have transparency and maybe liquidity, that's awesome, right? We got a while though, right? We need the private credit funds to come in and use the software to bring it on chain. So I think there's again, a lot of market structure to form. USDC is a really great way to think about how this thing's going to evolve. USDC continues to go cross-chain, right? So every new chain that launches, the first thing they do is they go, we have to get a stablecoin in here. There are other chains launching that have their own stablecoin that use USDC as a backing instrument as well. So you'll see more about that from other networks that are coming online as well. So there's a lot of Lindian network effect to that particular product, so it's an important part of the ecosystem.
Definitely. In terms of market structure, distribution is obviously king at the end of the day. You were working with pensions on the iShares side, right? I'm curious if there's anything on like the wealth management, RIA side you guys are working with kind of directly. A couple I'm familiar with, like On-Ramp Invest, L1 Advisors. I know there's other groups forming, a couple I met here, in fact. Are you guys doing anything to help aggregate products for them on behalf of their clients? Or what's that kind of look like?
Yeah, I think you, I love what they're doing. L1, for example, is great because the smart contract routing effectively on base for like any kind of crypto or other tokenized product. So it's really novel, and it's one of those things, one of those products that I think become a key part of the market structure to help more of this market structure form. But it's still early. Again, like we barely have tokenized products, a lot of them, to bring on chain that can be consumed by those smart contracts, right? So again, you have to get permissioning built in into that smart contract flow, and again, that takes identity on chain. But it's really novel and key. On the flip side, you have maybe some of the banks and other wealth channels that are looking at this, saying, can I take the existing tokenized product and embed it into my Web 2 distribution process, right? And I think some of them are going to find some success in doing that, and they'll be able to serve their clients within their ecosystem with those products over time. Regulations like SAB 121 is the talk of the town right now, especially after yesterday. So regulations in the US are hampering that. Regulations in other jurisdictions like Singapore are allowing that to start to begin. However, from our perspective, serving your customers in that way is great, but we still believe that the assets themselves have to be tokenized in a way that allow them to move across Web3. They allow them to be self-hosted in your wallet, right? And this is the thing about financial inclusion and economic freedom that allows for billions of people around the world who are cut off from financial services to access these products. So if we go down the route of tokenizing products so they can be ingested into closed ecosystems, that's going to serve one user, and that's usually the asset manager or the bank, right? We want to build these products in a way where they can move across public rails, right, and ultimately be available for investors all around the world.
Beautiful. To that point, one last question to wrap it up. I've been hearing buzz about these smart wallet, Coinbase smart wallet. Is that a retail-oriented thing? Is that institutional focused? Eventually, if we could start getting tokenized products through your partner, platforms through that would be huge. But in general, do you have anything to share on that front that we should keep an eye out?
Yeah, just a quick word on smart wallet. It's one of the examples that you're going to continue to see from Coinbase of us iterating on technology to make it more efficient and hopefully abstract away the complexity of the blockchain. So we have a Coinbase retail wallet, which if you open your app, raise your hand if you're a Coinbase customer on the retail side. So solid maybe like 30% of the room, so thank you all for your business. You have your wallet. You also have a Web3 wallet. Sorry, you have your Coinbase self-hosted wallet, which it's tied to that wallet, but it's self-hosted, so you can go and sign DeFi applications. Institutional has a Web3 wallet too, same tech, same security, right? But all Prime customers can now use that, and we have the recovery key. Smart Wallet is another iteration on the wallet, where we think things start to transition over to Smart Wallet because it's faster, easier, and can be embedded into the user experience of an application. So if you're building a front-end app and you want to give people access to have easy on-ramping into your product suite, right, and they're Coinbase customers, you can now use Smart Wallet to automatically move dollars in, move USDC in. the trade of the fiat transfer automatically settles on Coinbase's exchange. So it's a retail product right now, but we do see that same tech start to evolve into the institutional side as well.
Awesome. No, very exciting. Major key to onboard users, make it easy, make it simple. I think we're all heading in the right direction here. Anthony, listen, thanks so much for your time, and this was great. Masterclass on the Coinbase stack, looking at tokenization. If you're a player in the space, issuer, platform, service provider, you know who to get in touch with and kind of how to get going. Any parting thoughts?
Yeah, I'm here all day to chit-chat with anybody that wants to talk about building on Base and integrating with the Coinbase ecosystem. So please come have a chat with me outside.
Awesome. All right, thanks everyone. Keep enjoying TokenizeThis 2024.
Thank you all. Thanks, Peter.